And there you hear it, the opening bell sounding on Wall Street. What will today bring after a rough day yesterday? That's the big question. The stock market suffered its worst day of the year after President Trump did not rule out the possibility of a recession amid his on-again, off-again tariffs. Those trade policies creating a volatile market that has investors on edge. Let's bring in NBC News business and data correspondent Brian Cheung. He is on the floor of the New York Stock Exchange for us. Brian, good morning. So we're going to be seeing how things react just right off the bat. Futures, did they give us any sort of signal of what we can expect today, Brian?
Yeah, good morning, Joel. The markets are now actually open, and it is a red open with the Dow Jones and the S&P 500 down. I see the S&P 500 down about 0.3%. The Dow Jones down about just about flat, down only about 70 points right now. But nonetheless, this is actually kind of a U-turn from earlier in the morning when market futures, again, because the markets don't open until 9:30, but implied pricing has suggested that some of these indexes could open up in the green after that, as you mentioned, a worst day of 2025 for stocks with the S&P 500 falling 2.7% just yesterday. The NASDAQ composite, that's the tech-heavy sector, dropping by 4% just yesterday. Again, some hope among investors that maybe today we would have seen a rebound at the market open. That clearly not the case, at least for right now. The NASDAQ composite down about 0.1% as well. Again, mostly about flat, but still not what investors had been hoping for after what was a very jittery Monday of trading, Joe.
Yeah, this exact moment I was seeing red, but just barely red, and looks like things might be climbing back towards zero right now. Tariffs clearly back in the spotlight right now, Brian. Investors do seem pretty uneasy about the ripple effects. Talk about how big of a deal these tariffs have been for the market. Which sectors have been feeling the heat the most?
Yeah, well, I mean, when it comes to the stock market at large, anytime you talk about the stock market being down because tech companies are so heavily weighted in those major indexes that we tend to look at, like Amazon, Meta, Google, those types of companies, yes, the big tech companies have been taking a big hit. But I think that the broader question here is that not only are we looking at what was the worst day of 2025 for stocks yesterday, but it's in the context of what has been a pretty miserable few weeks for investors. As the tariff conversation ramped up, we did see the stock market lose its gains for 2025 because at one point on the Dow Jones Industrial Average, we were up something like 5% year to date. All of that erased, and now we are now net negative for the year as a result of the conversation and the uncertainty that's been introduced into Wall Street and on Main Street, by the way, from the tariff war waged by President Donald Trump. Now, I do want to point out that all things considered, even when you zoom out when it comes to the losses, yes, it is indeed the case that the S&P 500 is down over 6% since Donald Trump's inauguration. The NASDAQ down 11%. That still pales in comparison to other types of downturns that we've seen. So this is not at all a recession like 2020. This is not at all a recession like 2008, 2009. But nonetheless, it has underscored this concern. And I was just talking with a trader just a few minutes ago that was saying, look, he doesn't think it ends here. That he thinks that there could be more opportunities to, in his words, buy stocks at a discount, which implies that the stocks could even go lower from here.
You know, right now, Wall Street is watching Washington, and it's not just because of the tariffs. There's a government funding bill that's on the table right now, fears of a government shutdown. Is that also something that investors are keeping an eye on right now?
Yeah, absolutely. And when it comes to, by the way, the government shutdown, there's a lot of kind of tie-ins to specifically the bond market and the way that U.S. Treasuries trade because of the concern that if the U.S. government cannot keep the lights on, then maybe they can't pay out the coupons on the U.S. Treasuries that investors hold. So that is part of it. I think if you just kind of were to wrap all of this into one word, it would be uncertainty, because it's uncertainty about whether or not the United States is going to tariff another country on any given day or any given hour. We saw that seesaw in the tariff headlines just last week. You have the uncertainty also coming from the government shutdown. Will we be able to avoid a shutdown come Friday into Saturday? And then there's kind of the other aspect of this, which is a bit secondary, but how will the Federal Reserve respond to all of this? They're the ones that have been trying to lever interest rates to take care of inflation. If tariffs have the effect of raising inflation, does that tilt the Federal Reserve into having to make an abrupt policy change? They had been lowering interest rates going into the beginning of this year, but does that change because of the result of all this uncertainty? Those are all open questions here, and that type of uncertainty is the reason why we have seen so much turmoil on Wall Street.
All right, Brian Cheung at the New York Stock Exchange, just about 5 minutes now after opening bell. All of the markets down, including the Dow Jones, down about 0.44% right now. We will keep an eye on the markets all day long right here on NBC News Now.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.